Hi there, Happy New Year. This is a session for L0, L1, and L2 projects. We're going to look into them through the Wyckoff lens with a speed run pace. If you're new to my sessions, here are the 3 key items I'll cover during these sessions. So let's quickly dive into the very first chart of Bitcoin Cash. So to kickstart the year, Bitcoin Cash currently is at around 3% higher within the last 24 hours, right? In terms of Wyckoff stage, currently is still within the distribution cycle. Previously, we discussed whether it's going through a second test or an upthrust of the distribution after the prior 2 sign of weakness, like 2 dips over there. And I also share that there's a chance that this red line, this resistance line, is still going to suppress the price, and currently it still remains the same. The price is trying to stay between the green key level of 615 to the red line that I talked about. This is a declining peak trend line that started somewhere in early 2024. So if it comes down, then we would probably see another sign of weakness around the yellow key level of 530. Then the next would be 450. If you are a bit more positive and ask about, would there be a chance to go up even further? Certainly there is a chance. However, like I said, with all those situations and the selling going on, the chance may be slimmer. It may reaccumulate and go to a higher level. So it's not a certainty yet for it to come down to the sign of weakness, but that's the whole point over here in the big picture. It's still kind of deciding where to go, because the volume isn't really, it's higher than the previous 2-3 months, but it's not particularly supportive when the price gets higher. We see these long wicks from the top. All right, if we get to the daily chart, once again, when it passes the 615 key level, the green key level, and also the ceiling of the horizontal trading area. So if I extend this a little, just to let you see, when it includes these peaks over here, that's where it tested in the past 8 to 10 days. Same level. Currently, it's trying to go back to above the green key level. Looking at the volume, it's not too bad, but we need consistency. All right, a couple of days of white candlesticks with pretty good volume. However, the white candlesticks comes with quite a bit of selling, especially when it reached the 615 level. And then eventually the next day, there was also quite a bit of selling, but it's basically the bulls and bears are, fighting around this area. Doesn't really going anywhere. And then eventually we've got quite some heavy selling on the 29th. All right, so like I said, when the price continues to trade along this triangle, by mid-January, we would be able to see whether this uptrend that started somewhere around November 20th will continue, or is it going to fall outside of this support line, continue with the sideways trading. From the big picture standpoint, that's possible. All right, and next we've got Binance Coin. So we'll start off with the one that are still in distribution cycle, and then we'll get into the ones that are in early accumulation, and the final part of the video we'll get into those that are in late stage accumulation. So this one, previously we talked about that whether it's going to come down to the red key level of 505 for the sign of weakness. That's similar to what happened back in February and March. Currently it's still staying above the purple key level of 845, trying to once again challenge the 926 level over there. This may evolve into another LPSY, last point of supply, meaning the rebound, those mini peaks, all right, after the price fell. That's still possible. However, if you look at the volume, there's still 2 days and 5 hours left, so it's not too bad. It's basically around average. If we go to the daily chart and quickly take a look, it looks like the horizontal trend is really going on, and like we discussed, that somewhere around Boxing Day, that trend change confirmation would come, and indeed right after Boxing Day, that trend change confirmation kicked in. Alright, currently it's being suppressed under this resistance level of around $890. Alright, let me extend this line. So if it continues sideways along this trend box, that's something that's more likely to happen. However, I also shared that this bigger trend or channel over here is basically the uptrend that started way back in 2023 December. So when we get closer to 19th, 20th of Jan, or near the end of the month, we will get to know, if the price really comes down and challenges the bottom of this uptrend, there is a risk that this uptrend may be over. But it's too early to tell because it seems like it's still enjoying this safety period as of this moment. So that's for Binance Coin, still within a pretty high level, not showing any signs of particular weakness yet. Alright. Next we've got DCR, Decreed. So for Decreed, it's basically still within this distribution, and I'm suspecting it's trying to transit into accumulation, just that the bulls are not allowing it yet. The red volume this week isn't particularly high, so the bulls may be successful in creating another test. The second test is ST. Whether it's going to challenge the purple key level of $32.63 or it's going to just land somewhere along the other lines around the 20s, the $20. It's still too early to tell. Alright, daily chart. The price got rejected from the ceiling of this downtrend. We said there was a chance around the beginning of the year. Obviously that window has passed, and then the next window comes in around the 9th of Jan. I see we can adjust just by a little to align these peaks with the latest candlesticks. I'm not going to include this fake bull false breakout situation. Alright, that's where the center line cut across. So if that, after the adjustment, instead of the 9th of Jan, we've got a few extra days to observe. Obviously, if it fails to break outside the downtrend by the time the price reaches near the yellow key level of $15.66, we have to look towards the orange key level of $13.90. So that's somewhere near 21st of Jan. Okay, that's Decreed. And then we've got Ethereum. For Ethereum, again, very similar. It's either developing another LPSY, or it's probably going to come challenge the prior high levels. So whether it's going to get rejected from the light blue key level of 3,200, or is it going to go challenge all the way to 4,000, it all depends on volume. Alright, this is the very first time that Ethereum got a chance in 7 weeks that it closes above the 3,070 level. You see the other 6 weeks all closed below that particular level. This is a level set by the previous trading activities. If we go to the daily chart, currently we see today with higher than average volume, seemingly Ethereum is breaking outside of the downtrend. So right before Jan 11th, like we said, so after it missed the window before Christmas, now is trying to show us that it's seemingly turning into at least a sideways trend. However, just to make sure this is not a false breakout, let's wait for another day or two. Okay? Let's hope it doesn't return to the downtrend. However, if we look at the big picture, if it really is coming down from the distribution and not starting an accumulation at this point, then definitely there's a chance for it to come lower. Okay? Of course, you can say, what if this was actually the selling climax back there, right? Instead of a sign of weakness, which this in February was the reason why I consider it a sign of weakness instead of a selling climax. So we've got a few weeks to observe. Let's see by the time we get to near the end of the month where it is at that point in time. Then we can decide further. Next one is Hedera. Hedera seemingly, getting through the panic over stage and coming towards the automatic rally. So automatic rally is somewhere the trading range top of the accumulation cycle is being set. Right, that's where it's seemingly heading. From the candlestick perspective, with a long wick coming from below the purple key level of 109, that's a slightly positive sign that is supporting the move as of this moment. So if we look at the chart, the volume today especially looks pretty strong compared to the past 2 to 3 weeks. So it's the first positive move towards the potential breakout confirmation. It is still within the weaker side of the downtrend, however. Right? The 6th of January is a pretty challenging target to meet. I don't expect, unless some big announcement came out. Otherwise, I don't expect it's going to climb all the way above the red key level of 17 cents 50 within 3 days time. All right, and then obviously, if the white candles continue with these kind of volume like today, then the chance for it to go above this white solid line at around 13 cents becomes a possibility. And if that happens, then by end of February, near beginning of March, there is a chance that we see Hedera finally getting outside of the downtrend. Okay, it started somewhere in July, and after almost half a year, seemingly it's getting there. Next on the queue is Solana. So Solana is still going through the stage of showing us a sign of weakness and potentially coming up for an LPSY. However, the volume is actually like about 50-60% of the past 2 months. So it's not a pretty strong rebound. And here we definitely see it's trying to break outside of the downtrend. And I did share that when we get closer to January 8th, the chance of it changing the trend or confirming the trend change will happen. Of course, if it gets rejected from the ceiling of the downtrend, we have to wait near the end of the month if the price finds sufficient support at the orange key level of $100. Currently, it's trying to stay above the 125 yellow key level and show us the trend change. All right. And next week we've got Tron. Tron still pretty high up after the upthrust, and this is potentially where the whales offload quite a bit of whatever they have on hand if they don't plan to push Tron further up. However, it looks to me the downtrend hasn't finished yet, Okay, let's get to the daily chart and see what's going on. Even if we are expecting like a sign of weakness, may appear that would challenge the 0.199 level. So here, the uptrend that I said that may still be going on. Let me borrow this box and just draw this bigger trend that's been going on for quite a while. Just to make sure we have the peaks pretty much included, except the blow off wick over there. So this is roughly the uptrend I tried to draw. That started somewhere in summer 2023. Alright, Tron is still within this uptrend, even if it breaks outside of the downtrend like what we discussed previously. Before the 4th of Jan, which it took earlier on the 27th of December, that it broke outside of the downtrend and currently being suppressed under the orange key level of 0.287. If the sideways continues, if the sideways trading continues, which we can see clear consolidation over here. So there is a chance for it to change side pretty quickly. When that happens, be cautious about that. So if I switch on this, the Bollinger Band Keltner squeeze hasn't happened yet, but it can evolve in the course of January. So pay a close eye on this one, because in the daily it definitely is squeezing. So it may swing to one side or the other when the time comes. Alright. Next we've got XMR. For XMR, currently is coming down from the upthrust. So previously I said there's a chance that we may see an automatic reaction coming down to the 355 level, the light blue key level. Well, obviously you can say it's 357, but roughly around that range. So it's just a chance. It can bounce up from this point and head straight to the upthrust of the distribution. I'm just showing you different possibilities over here. Of course, the more pessimistic view is that after it comes down for an automatic reaction, it may have a rebound and then eventually come back down to the sign of weakness level. Okay, the previous sign of weakness was marked back in summer 2025, and if you're bullish towards Monero, obviously that's not something you want to see. However, if we look at the daily charts, we are getting very close to two time points. One, 11th of January, the other one, 21st. Currently, it's trying to stay above the purple key level 417. If it can't hold and comes down to challenge the bottom support of the uptrend, eventually when we get closer to the 11th of January, there may be a trend change confirmation that the uptrend is over. If it successfully stays above the purple key level like yesterday and today, then moving into 21st of Jan, that's the second occasion where a trend change confirmation would come if there's no sufficient support. Alright, this, whatever happened on the 21st of December with the higher than average volume, but quite a bit of selling from around $500, that's not a bullish sign. Alright. However, the selling volume on really very fierce as well. So it may be a stage where people are still hesitating whether the price will drop further, or is it going to make another new high within the past probably over 4 years. Okay, Next is Zcash. For Zcash, similarly, it bounced up, and then it's currently this week it's coming back down. And the thing here is, would this be just the last point of supply where whales have probably already offloaded quite a bit, or is it just the intermediate step towards the second test, or even an upthrust, a level higher than the buying climax? Looking at the volume, when the price climbed in the previous 3 weeks, the volume has been continuously declining, and then we have the current week of red. So it's not a supporting sign for it to go very high up compared to what we had back in November. You see, the volume was way higher, and that's what pushed the price to that kind of level. It's way different now. In terms of daily, when we look at this, we see the price is passing the point that we marked, the 4th of Jan. So within next 2 days, if it doesn't suddenly drop outside of this downtrend, we can assume that it's probably going to continue. Just that it has been trading on the weaker side of the uptrend since early December last year. So be cautious that it may eventually break outside. So the level we're currently looking at after all the previous marked that we have set in, this clearly was the support of the previous couple of trading days, and that when it crosses the bottom, the support line of the uptrend, that points towards the 20th of January. So if 4th of Jan proves to be a non-issue for the uptrend to continue, then the Jan 20th is going to be another one, because the price currently is trading underneath that line, and it is going to naturally head towards the tip of this triangle. Alright, after Zcash, that's all the distribution cycle projects. The one in early accumulation cycle start with Atom, and seemingly the panic may be over. The volume of these white candlesticks is around average, so not too bad. And the wick from the bottom, coming from the white solid line of around $1.88, it's again another positive sign. The price would come up to an automatic rally, setting the trading range top for the subsequent weeks or even months. And of course, you already know that the price may come down for more tests to check out paper hands. In terms of daily chart, we talked about by the end of the month, we've got a chance of a trend change confirmation. If this fails, if the boost fails to break outside of the downtrend, then we have to probably wait till the 20th of February. Further down the line would get us into somewhere near middle of the March. Next is Chronos. Chronos currently, again, at the early stage of accumulation, the panic over period or stage may have kicked in, the selling climax. We have to wait for a couple of more weeks to confirm. If, like what we said for Atom, Chronos is also coming up to challenge higher levels, setting the automatic rally, the trading range top, then we can confirm the panic over period is done, just that the subsequent paper hands, diamond hands test period will follow. Sometimes it's pretty quick, sometimes it takes longer. Look at what happened over here, just in second into roughly about second into early third quarter of 2025. So daily, this date points to January 18th. Right, that's where the price currently finding support above. That's around the 9 cents level, and if it continues to be suppressed by the 10-cent line, traveling within this 1 cent level, somewhere near the first 18, 19 days of the month. Let's mark it 20th. Before the 20th, we'll get a first chance to see whether the trend is going to finish. If it doesn't, we have to wait till the end of the month. Alright? I don't want to move that dashed line. That's pointing towards somewhere the 31st of Jan. Okay? Next, we've got EGLD. For EGLD, it hasn't got a bounce yet. We don't see a white candle, but the longer wick from the bottom is a slightly positive signal that we're having. Of course, it can go deeper to somewhere near the October 10th level. However, the volume has also been low, so that's another relatively relieving sign combining the uplick that we are seeing. So let's hope these white candles continue with higher volumes like what we had in the beginning of December last year. Alright, of course, the orange key level is definitely going to be the resistance. That's around $6.44, at least for the short term, because you see the past 7 to 10 days of trading, that particular resistance line has been constraining the price to go further up. If the price successfully climbs above that orange key level, eventually when you get closer to the Valentine's Day, there is a chance for this downtrend to confirm that it's over. If it doesn't, however, if it continues to trade along this weaker half of the trend, then we may have to wait till early May to see the trend change confirmation. If it really comes down to challenge the red key level of $2.8, like what October 10th did. Next, we've got flare. So flare, similar to EGLD, is coming down, but there's a long wick from the bottom. So even the volume is high, there's like around at least 50-60% was buying from the dip. Alright, of course, we talked about this U-turn back in October 2023, and we hope to see something similar. Alright, it first started with a candlestick with pretty long wicks. That was both sides back then. This time, it didn't go to the high side, but the lower side also shows sufficient support. So let's see whether that can continue or turn into a white candle for the coming week. These selling volume on the 31st wasn't really encouraging. Alright, so I assume there's still a bit of struggle or some battles between the bulls and bears around this level of 1 cent. We talked about these dates, and obviously the stretching target did not happen. January 12th is the next day if the price really climbs back to above the white level of 10 cents. If it doesn't, we have to look across to what happened over here 2-ish, 2.5 years ago roughly. There's definitely certain points where we can seek or find relevance. So let's draw a line over here. Let me enlarge this and tell you why I draw this line over here. You see these two candlesticks closes along this line, right above that, and then these wicks touching this line as well as this wick over here. So that's why I'm keeping this line over here. If we look to the right and extend it, that's where the price is currently pulsing. So you see the candlestick of yesterday and the day before closed and open around that level. So that clearly has some or certain effect to the price actions. The next one with relatively sufficient reference, I would consider this level. you see these two candlesticks where they close and where it opened, and then these wicks over here, these 4 wicks. And then further down, we have this level. Alright, I'm drawing 2 more levels, so next time when we come back, if the price continues within this downtrend, then we've got a couple of more days that we can observe. Alright, currently we've got the Jan 12, and then the next is 18th of Jan. Okay, next is Litecoin. For Litecoin, it's very clear. It's trying to stay above the orange key level of $79, and the selling climax period or stage might have surfaced already. And depending on how high this current run is going to go, the volume isn't really that high as of this moment. If we look back in history, for automatic rally, that's usually the case. All right, they won't be of very high volume, but then the price would bounce a bit before it comes back down for subsequent tests, of paper hands, diamond hands. Whether you call that second test or just test, it's totally fine. For daily, today, it started to edge towards the stronger half of the downward channel. So if I zoom up, you see it's just today that it is trying to go above this center line over here. Yesterday, it already broke above the $79 level. So let's assume it's going to travel sideways at least above the orange key level, as well as this white dash line at around $88. So that's where it found resistance back in November all the way into mid-December. Alright, if that's the case, by the end of first quarter, somewhere before the April Fool's Day, this is a potential trend change confirmation time period. Of course, you say, oh, what if the automatic rally goes even higher? Then let's take a look at this date. That's somewhere around the 4th of March. Alright, let's have this marked here as well. After Litecoin, we've got Sweet. For Sweet, again, it's somewhere around the panic selling stage where whales starting to buy and the panic over stage. Somewhere between those two. Looking at these chunks of candles, sometimes during the PS stage, the preliminary support stage, that's very common. So look at what happened over here. There was about 6 weeks of sideways trading before it really drops to the panic over stage, and then trade and accumulate before the next distribution. So this may be something similar. So that's why we have to observe for a couple of more weeks to see where Sweet is really heading. And in terms of daily chart, we talked about the potential trend change confirmation comes before December 29th, and indeed on the 27th it came. And then for the subsequent days into today, it finally broke above the orange key level of $1.50. So while this downtrend is seemingly over, if it really develops, this is really where the selling climax is, and it develops into the automatic rally stage, that's not bad. Just that, be careful when it comes outside of these downtrends. It may trade sideways for a while and then evolve into a new downtrend. Alright, so it doesn't follow the previous rate of decline already, but that doesn't mean it has completely finished the adjustment towards the south side. Right? Look at what happened back in summer 2024. Those prices were way below the $1 level. Alright, so just a caveat, while we are hoping to see a move to the north, a move to the south should not surprise you because of this uncertainty whether the selling climax has actually surfaced and that the volume, the white volume, isn't really that strong. Then we've got Celestia, TIA. TIA, again, going through a similar stage where the panic over period may be showing up. Alright, this is like a little bit of U-turn shape, a red candle and then white cross, and this week's candlestick. Again, the volume is pretty low. It's actually the lowest across the past 7 to 8 weeks. If we go to the daily chart, while we are hoping the selling climax to have surfaced and the automatic rally to come next, currently the price is still trading along the weaker half of the downtrend. So we want to see it break above the center line and eventually moves outside of this trend box. So if it is really that positive, instead of having to wait until the mid of March, it may break out when it trade along this triangle. So let's borrow this. That's pointing towards somewhere around. Okay. Of course, this may act as some form of resistance. So not only saying this 55 cents level, that certainly is going to be the near-term resistance. I'm talking more about this level. This particular period, during end of November all the way into mid-December, that was the resistance. That's around 65 cents. Okay, so these two dashed lines are the ones that we have to closely observe in addition to the downtrend box. After Celestia, we've got Tesos, XTC. So XTC definitely heading towards an automatic rally. Alright, it may finish around the current orange level. Next week we can tell because the volume has dropped significantly. It's less than 50% of what we had last week. So going to the daily chart, it clearly has climbed to the stronger half of the downtrend. Alright, this is the center line over here. That volume was pretty impressive, just that it doesn't continue. Okay, so we want to see a continuation of that volume. And with that, that's where the chance of breaking outside the downtrend comes. If it continues to be suppressed by the current orange key level of 51 cents and continue to travel or trade sideways, we probably have to wait near the end of Feb for a trend change confirmation. Of course, if it's more pessimistic, then mid-March or late of March would be the other two. However, if it really heads further north and the automatic rally lands somewhere between the yellow key level or even close to the green key level of 0.0021, then these states will continue to move forward. Just that, like I said, the volume has come down. Let's give it the benefit of doubt. It's because of New Year's Eve, New Year, people on holiday. This date would be right before Valentine's Day. If the price stays above the orange key level, successfully breaks above it and then stays above it. We clearly see rejection from the yellow key level of 53 cents 40 for the past or the dates on 30th and 31st, after December 11th. So that's going to be a bigger challenge. Alright, after Tesos, we are moving into the late stage accumulation projects. The first one is Aptos. Aptos, going through the paper hands checkout stage, while we are hoping to see a new sign of strength, it definitely is picking up. Looking at the volume, it's been consistently climbing for 8 consecutive weeks, and these white candlesticks are giving a sign of relief that this downward test may finally be over. And indeed, in the daily chart, we see what we said, before the 2nd of Jan, we would see a trend change confirmation. And indeed, yesterday it came in. The volume, we want these volume to continue, right? Keep pushing and pushing towards the white solid line around, or get very close to $3. Okay, that's the very first important step to get back into the long-term playground, because it's right outside, way outside actually, of the long-term playground now. If I zoom out, you see where the long-term playground covers. All right, it was only a very brief period that the price went outside. We definitely don't want that long. We are already way longer than that time. However, if the capital situation doesn't improve, it may stay below the white line for longer than expected. All right, let's hope that's not the case. In the daily, after this, we just need to keep observing how quickly the uptrend is. Currently, it's too early to draw an uptrend box. By next week when we come back, we may be able to draw something over here. Next, AVAX. Clearly, it looks like it's outside of the downtrend earlier. All right, I can adjust this a little bit further, just that during that time it wasn't still very sure, because it's the bottom side, we're still able to cover the candlesticks, the wicks, and the tails. All right, so sometimes we definitely need to adjust and see whether that's the case. So this has clearly happened, that the support has been found along the blue key level of $12.20. If we look at the big picture for AVAX, you clearly see this turning happening, just that the volume is getting slightly lower. Again, is Christmas and New Year's week. Let's hope the subsequent weeks in January isn't going to drop further for the volume. If that happens, then the sideways trend may last for a little longer. That means the price may trade between $12.20, the blue key level, and the purple key level of $14.05 may last a little longer if the volume comes down. After AVAX, we've got Chiliz. Chiliz, much like the others, you see this U or V shape happening. Volume has been slightly increasing over the past 8 weeks. Again, you're hearing me saying this the second time. In the past 8 weeks, this is another one that we have increasing volume. Just that, this may be the sign of strength that's coming in. All right, this is the very first challenge that comes with volume, hopefully towards the orange key level of 5 cents 40. That's where the automatic rally got close to. We definitely want to see that this leg come up to challenge the orange. The good sign is that a couple of days ago it broke above the red key level of 3 cents 60. If it trades sideways between the red and the orange key levels, that's totally fine. Of course, we want to see it goes into a new distribution sooner. I understand. Let's hope that's the case. That's what Chiliz is definitely getting some positivity. Next, Polkadot. Polkadot, here we are having this white candle longer, but the volume is lower. There are still 2 days and 5 hours for the bulls to work on it. So let's give them time. The very first stage they have to challenge is the 2.28 level. All right, that's when mid-November came down. That was the support. Now it becomes the resistance, because you see what happened during late November all the way into the second week of December. All 3 times, those rejections, you see these long wicks from the top, came in. So this turn is definitely going to show us whether the bulls have sufficient strength to break above this 2.28 dash line. And like we said, before the 2nd of January, we would see a trend change confirmation. And indeed, it came on the 27th with quite a bit of volume. So that's a good sign. Let's hope it continues. And by next week, again, we probably can draw an uptrend box already. Currently, it's still too vague and too narrow. After Polkadot, we've got Flow, and Flow got hammered quite a bit earlier in the day. Currently, it's still struggling within the testing stage. You see the crazy volume over here. People got in, probably pumped up quite a bit to above the red key level of 18 cents 80, and then got heavily rejected from that point. So if we look at the daily chart, while we're hoping for the testing period to finish, look at what happened right over there. On 27th, the bulls push very hard trying to get the price back into the downtrend, but they weren't successful, and more serious price decline came on the subsequent days. Yesterday, obviously there was quite a bit of buying, but then it got heavily rejected. So the volume wasn't that high. Today, interestingly, you see the difference. Yesterday's price spread compared to today. Today got way more volume, almost 3 times, if not more, than yesterday. So definitely the bulls have been buying at this point, while some people are trying to sell. However, the spread isn't that high anymore, so it may stabilize along this level. Let's draw a line and see whether that's the case, that it's going to stay above the 10 cents line. All right. So while we're here, I probably would adjust this as well, because of the price move happened yesterday. This probably isn't reflecting very well. All right, now it looks a lot better. So those dates have to be changed. Instead of Feb 11th, this over here points to the 17th of January. So if the price really comes up a second time to above the 1.68 level, not even talking about the red line, that's going to be the 7th of Jan. That's going to be a very stretched target. If you like, I know you probably are, you probably want to see that. So besides the 17th of Jan, definitely we can point one towards the 7th of January. That's going to be a very stretched target. I don't think that's a likely scenario. Even the 17th may be challenging. This, however, would be more of a higher chance scenario that the price continues to trade along, trying to seek support at this level, and eventually give us a trend change confirmation by the end of February, or somewhere close to 22nd of Feb. If you look to the history of flow, there isn't such a low point. So that's why I said, for altcoins, the drop may not be over for everybody. okay, flow has demonstrated that things can still happen. Now we've got Casper. From a bigger picture perspective, it's still somewhere in the mid stage of the accumulation cycle. It's going through the testing stage, whether you call that a second test or, to make it simple, just test, to shake out paper hands and keep only the diamond hands, is continuing. The volume has been getting lower and lower. Like I said, give it the benefit of doubt of Christmas and New Year. It's trying to definitely break above this white dash line of 4 cents 50. Previously, we talked about that if this is a downtrend within this sideways trading area, there's a chance before the 10th that it's going to break outside, and indeed it happened. So if this higher lows, I don't want that, I just want to borrow a line, let's say this one, let's get rid of the other one. So here, this is a very long line over here. So let's try this. I don't want it to go that far. See where it goes. Still pretty long. No. Sorry about that. I want 450. And then, yep, that's where it is. I'm just trying to show you this trend of higher lows. If this really is the case, that the price is traveling along this line. Okay, and this kind of explains why it broke out on the 1st of Jan. You see this cross over here, right? And then definitely the next is for it to try to continue to go up and up, 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 right? It's Casper's moment, if that's the case. But let me extend this box. Of course, that's going to be quite a number of challenge along the way. Now that is above this 4 cents 50 level, this date over here around mid-March is going to be the next point of challenge, whether it's going to stay above the support line. Alright, that's getting very far, we're getting very far ahead. The next, or even next month's sessions will come back to check. But the base case is the sideways trading underneath the red key level of 6 cents 50 and above this yellow dash line of 3 cents 70 is the expectation. Definitely we want this to get finished sooner to get above the red key level of 0.065. Alright, then we've got polka dots. Polka dots, we have it a pretty strong white volume and a short white candlestick with a wick from the bottom. That's a positive sign. Alright, we see this downtrend getting, these candles getting shorter. Last week we've got this like a red cross. You see the cross over there? Both long wicks from the bottom, and this is the 3rd consecutive long wick. This may be the short-term bottom, if not an immediate bounce back to above the red key level of 15 cents. Right? It may still receive rejection from the 15 cents. You see all these October 10th selling climax stage. That's probably a point of test before it goes higher up to challenge the yellow key level of 28 cents and show us another sign of strength. Looking at the daily, this downtrend, like we previously talked about, somewhere near the 2nd of Jan, we'll get a confirmation. And the previous couple of days near the year end, it was still struggling along the ceiling of the downtrend. And yesterday, we've got the very first confirmation, and today it pushed up even further. Alright, so that's a good start for a lot of altcoins that they seemingly, like we have been discussing for quite a number of weeks, that they're finally getting to a point that the paper hands test seems to be near finish. Alright, let's hope that's the case for everybody, and a new page of crypto is going to come in 2026. However, be really cautious, like I shared in my previous video, that Japanese interest rate, if they hold it high and long, that's another story. Alright, thanks for joining me. See you in other sessions. Bye. One more thing. All these charts, I've created memberships. So the tier 2 membership, you will be able to access the PDF version of all the crypto projects that I cover, including all the key levels as well as the Wyckoff stages. So just to add to that.